Economic and political events can affect gold prices at a local level. So any anything that creates uncertainty and affects the economy badly. So if any of these things happen or there's changes in one of these variables, then we will see concordant changes in gold prices. So if changes in these variables create uncertainty, gold prices increase, and when the opposite occurs, when things are going well, gold prices decreases. So the simplest example is Brexit. So the UK leaves the European Union. This creates uncertainty and worsening of the economy. This increases gold demand, and this increase in demand causes an increase in gold prices, and essentially, like, just the referendum itself, after referendum, the price of gold jumped 22%, and this is like a real link to the Guardian, the newspaper. So this is at a local level. What about if you go um, to increase the scale? So let's look at it internationally. Um, so internationally, similar things, similar variables, just like the previous one, and everything is the same. So any of these things that cause uncertainty and affects the economy negatively is gonna cause the gold price to increase, and vice versa, to decrease in gold prices. So the difference is that when we are looking at local events, local economic and political events, these have more direct effect on gold prices, whereas world events have indirect effects. So, for example, um, when the Federal Reserve increased the money supply, this obviously devalues and weakens the dollar, and this, of course, causes an increase in the gold price in dollar terms, but it actually becomes more favorable to buy gold with other currencies. I'm using the example of pound sterling here in value terms. So let's look at this example here. So the M1 money supply on January 2020 was almost $4 billion, and in January 2022 it was 20.5 billion of dollars. So that's a 415% increase in the money supply. Now, in this time period, what happened to the exchange rates because of this increase in money supply? So we can see that the USD GBP exchange rate was $1 was 76 pence in 2020, and in 2022 $1 was 74 pence almost. So the dollar became weaker compared to the pound by 3.25%. So, but when we look at it the other way around, let's look at GBP to USD. So in 2020, £1 was $1.30, almost 31, and in 2020, £1 was $1.35 or 36. cents. So the pound became stronger relative to the dollar by 3.66%. Now bear in mind that these values that I've got here, these are average. So the average of the month. They're not the actual price on that date. It's the average of the whole month. So that's why there's a bit of a difference in the percentages here. But you get the idea. Increase in money supply, decrease in the value of the dollar. But how does that affect the gold price? So the gold price in 2020 was $1,583. But if we convert it to pounds using this exchange rate, we can see that the price in pound terms would have been £1,210 and 68 pence. Now in 2022, the price of gold clearly increased by a long shot. So it was $1,853, which in pound terms, using this exchange rate, was 1,371 pounds. So the gold price in dollar terms increased by 17.1%. Now if we go to the UK side, let's imagine that we are buying a gold coin in a UK shop instead of a US shop. So we got in the UK the price of gold was £1,204 using this exchange rate, which was in dollar terms 1,574. And then in 2022 it was 1,338 pounds, which in dollar terms is 1,813.66. So that's a 11.13% increase in the price of gold in the UK market. And in the US the increase was larger. So what does this all mean? Well, it means that when you're buying gold in the US market, let's say from a US gold dealer, you're actually spending less pound sterling to buy 1 ounce of gold in relative terms. So if I were to buy gold in a US shop with pounds, I would spend less in relative terms. So this is simply because the dollar has been devalued because of this action of the Federal Reserve. And similarly, when you are selling 1 ounce of gold coin in pounds rather than dollars, you get more value out of it. So essentially, every time the price of gold increases in dollar terms, it actually becomes favorable to buy it with a foreign currency, but a big one, so euros, pounds, simply because the value of these currencies are larger than the US one. Now the counter argument, of course, is that although that is the case, it is more favorable to get rid of your dollars. So sell your gold for dollars, but then convert the profits into something else. Because if the dollar is the one that is being weakened, then surely you're trying to get rid of it. So that's one of the strategies that is often utilized. So what about some other events? So there can be other world events that can affect the price of gold. So we got 9/11 here. So as we can see, there's a really sharp rise in the price of gold following this tragedy. And similarly, you see that when Russia invaded Ukraine on the 24th of February last year, the price of gold did increase bit by bit over time. So usually there's a lag after an event occurs. There's a lag there, but over time the price does increase. Now similarly, you see in the US, when the US Mint decided to halt production sometime around November, we can see that the price of gold again steadily goes up. So in some world events, such as, you know, 9/11, we can see that the rise is sharp, it's very quick, but compared to other events such as the Russian invasion, the US Mint decision to halt production, these have a lag. So the price of gold doesn't change rapidly. It just changes very slowly. So yeah, that's about it.